What's up, YouTube? It's Joe Catchpolia sitting on the couch making some money investing in fractional real estate online, as usual. Today I'm going to talk about the Blitzen, which is Mogul's latest Padsplit in Phoenix, Arizona. This deal is pretty unique as far as deals that they've done, so we got a lot to talk about. You might be wondering why I'm so late in picking up, doing a video on this one. Oh, maybe it's because it's Christmas vacation. No. Me and my whole family has just had the flu, so the last few days I haven't accomplished much of anything. I wanted to put something out while there is still some available on this. It's already more than 50% sold out, I think. What is their total sellout? Oh, not even quite. Not quite. Okay, total offering is 216. There's 122 remaining, so not quite half sold out yet. I wanted to get something out while it's still available. Hopefully this is... we'll get through this together, and I won't have too many coughing fits in the middle, but we'll see. We'll see what happens. So what's different here? This is a property. They're buying it from a wholesaler, so it appears like it's being bought off market. It's possible that the wholesaler locked it up when it was on the market. I'm not sure, but it's being bought through an assignment contract. They have an as-is appraisal that is, what do they say, for $375,000. Even though they bought it for $342,500 through this assignment contract. Now, one thing I hate being given an assignment contract without being given a copy of the contract that's being assigned, because this tells us basically nothing, right? We know, okay, this is our cost, but what it's whenever you do that, it's just I'm surprised they wouldn't give us the underlying contract as well. But if you're not familiar with how wholesaling works, a real estate wholesaler, which is, a relatively new term, back when I got started in this business, we actually just called this flipping contracts. But then flipping houses sort of became, the only type of flipping that people, when you started talking about flipping, knew about. So then they needed a new term for when you were flipping contracts, so they just called it wholesaling. But basically all you're doing, going and finding a property, you're getting it under contract at what you think is a really good deal, and then you go find someone to buy that contract from you, and so they pay you an assignment fee. You never actually buy the property, and somebody pays you to assign us, for that contract, and then us as Mogul, so we paid this wholesaler the assignment fee, and then we buy the property, and so in effect, our cost is the $342,500. This person, I think, actually had it under contract for $325,000, and so they make a profit on the difference. There's some perfectly legitimate wholesalers out there that do a good job, and hopefully that's who it seems like maybe that's who we're working with here, because it looks like there's a deal. I believe this is already closed, but it's an industry that's just full of a lot of people who don't know what they're doing and are. I don't know. It's a industry with a very bad reputation, but I do know a few wholesalers that do excellent work. And it's just, it's really a buyer beware type situation. Typically you're paying, they have a $5,000 down earnest money. And a lot of times we don't have any contingencies written into this contract, right? Like it's just that money is spent and you got to move forward and buy it or you lose that money. It's very different from a typical real estate transaction. We don't have all the ability to get out in the way and get your earnest money back in the way that you do in a typical contract. But anyway, looks like we secured this, even with the assignment fee, the $342,500, well below the as-is value. And then they're saying, okay, we're going to spend another $61,000 to renovate and furnish the property. That number strikes me as really low, but I spent some time looking through the pictures that I could find in the listings online, and maybe it's not. And then so they're saying, okay, we're going to be all in at $403,000, and we think it's going to be worth $425,000 to $450,000 when it's done. This is the type of deal I'm excited about seeing Mogul do. Right now, it's a little bit scary because it's the first one that they're doing. Right, so we don't have any idea how good are they at project management. Are they going to be able to manage the contractors? Are they going to be able to get it done on budget? Or are we going to go way over, right? So there's a lot of risk built into this one. That's why, okay, yeah, being a value add strategy, I think that makes sense. As far as I can tell, I think they're really trying to be conservative with these numbers here. If we are stepping into equity day one and we're able to hit reasonable numbers on this, it seems like we should be able to do a little bit better. So I'm not sure. I don't know. I was surprised especially with the chunk of equity that we're probably picking up right away by doing things on our own. It seems like we should be able to do a little better than that. But using their calculator, you can always play with their. You can always switch it to their bull case. You can always look at all the different scenarios, right? So it is, even at 13%, this is one, I don't know, I'm more excited about this one than almost any that I've seen from them lately. And mostly because, I am a strong believer in yield is temporary, basis is forever, right? And so if we're getting this, for $30,000 less than the as-is appraisal, and then we're going to go do some value add by doing our own construction and getting our, furnishing it and getting it up to speed. I think that, this is the type of deal I like to be involved in over and over again, especially because it's not, okay, I want to show you, it's not a huge renovation, I don't think, I think the interior already looks, and I don't know how old these pictures are, but I think it looks relatively fine, right? I think, and especially because of how small that budget is, I think it's mostly just going to be, creating separate room, the additional bedrooms. I don't know. And that's one of the things that I'd really like to see from them. And this is so it is, I didn't even tell you about this. I knew this was going to be a rough one. It's 9 bedrooms, 4 bathrooms is what the end product is going to be. But it's really, I think, a 3-bedroom, 2-bath house plus a 1-bedroom, 1-bath casita. They're saying 6 bedrooms, 3 baths. So maybe it was 5, a 5, 2. I'm not sure what it was, but 9 bedrooms, 4 baths is what they're the end goal is. I'm sorry. It's going to be a rough video. I'm sorry. But it is so a couple of things to keep in mind. Well, I guess I want to talk about the valuation first, right? That's always been one of my biggest hangups. So having the appraisal already, right, before they even put up this listing, and I think it's because they closed on this already. Actually, it looks like the closing was supposed to be December 16th. Now it's going to be a while before it's up and running because they have to do the renovation and they have to get it going. It is, this is a tough one because it has the casita, right? Which is the separate living area. If you looked at the Maricopa County Assessor's Office, they show the detached living area as this really strange shape. And when you look in the satellite view, it looks like this too. So these floor plans are, I don't know, maybe they just don't have the ability with however they generated the floor plans to do this, but this little thing is not what it's going to look like. It is significantly different. So I thought that was kind of interesting. But one of the things I'm a little bit disappointed where this is one of the first real value add projects that we're seeing. They're buying something, they're changing it from one thing, to another, changing it from whatever it is now, 6 bedrooms, 3 baths to 9 bedrooms, 4 baths. I'd love to see a construction budget, some details of how we're getting here, right? Like this is the plan for it, but I'd like to see the before. And understand the timing too, right? I don't think that we got any, well, let's see. Usually you have it on this one where purchase property. Oh, this isn't right. March of 2026, anticipated first. So this doesn't seem right at all. Because the assignment contract, I'm pretty sure, close at 12/16/2025 or sooner. I don't know if this is really just the date that they think it's going to be ready to operate, and then so they put it purchase property. We're going to have to ask about that because I'm not sure what's going on there. I think this makes perfect sense. Anticipated first dividend April 2026, because even if we did just close on it, if we've got some construction, we've got furnishing, I think that makes sense. Although, it is one that you're going to wait a little bit longer than some of the other ones to get your first income. But in my mind, it's worth it if I'm getting in there at a better basis. And so, okay, let's look at that basis a little bit. We talked about so Zillow still thinks. Let me just move this. Back to listing. Zillow's estimate is 325. It's because it just closed at 325. Excuse me. So yeah, and it was up higher right before that, right? They listed. Okay, and actually it was listed. So it was listed at 389. Oh, maybe this is. So then and this happens in my market too, right? You'll have it on the MLS. It's listed, and then so it was listed at 389. Wholesaler goes in, gets it under contract for 325, and then they go out and sell that, assign that contract and charge an assignment fee. Well, okay, here, they negotiated down a really big discount, right? So I think that makes a lot of sense. And then, because on average, if you're going to buy this, most people aren't going to offer 325. And so, and I have listings. I have wholesalers offering me these ridiculously low numbers all the time. When you see deals like this, it is just surprising though, like that. Okay, why didn't we just go and make that offer ourselves? Well, wholesalers are sort of creating this service where they're going out and doing all this work, making lots of offers, annoying everybody for us. And then they get a deal, and then they charge us, a little bit of money to make it a little bit worse deal for us. But we didn't have to do all that work, so I'm okay with that. So anyway, Zillow thinks it's 325, but if we go to Redfin's estimate's 386, which is even higher than the 375 as is appraisal, and so is Realtor. Realtor says 380, almost 381, which again is better than the a little higher than the 375 as is appraisal. Those three things together, and the fact that they got it as is appraisal, knowing that it was under contract for significantly less, or I'd expect that they did anyway, makes me feel really good about this number, right? The 375 number that they said is the as is appraisal. So I think we're getting into this at a good starting point. And so, yes, we've got to have a lot of trust that, where this is Mogul's first project, that they're doing, this level of rehab, not having the seller do it, but actually purchasing it and doing it themselves. But this is the type of deal I was hoping we'd see from them, right? Because we were sort of buying these turnkey products from these sellers where, somebody else is getting the benefit of that work being done. So I don't know. I think that that's good. I wanted to mention, I know I've talked about Phoenix a whole bunch, but just as a reminder, one of the reasons I'm excited about this market is this fantastic population growth that we've continued to see there. I mean, even from 2020 to 2024, another 4%. So, I mean, going up still 1% a year. Their housing market has really not done well, right? I mean, over the last year, down 7.8%. We've seen this shape quite a bit, but maybe not as strong, maybe not as sharp when we're looking at other markets. Zillow still thinks over the next year it's going to go down 0.1%. And maybe so, in a lot of markets, we've seen this number sort of level off. I think in the short run, we're very much controlled by interest rates, but in the long run, those demographic trends are hard to deny, right? And so I think over the long run, and this is a market I want to be in, I don't, obviously we went up maybe way too strongly during this time period, and we've had, a bumpy ride since 2022, this is what was our peak here, right? But I believe, it's a market over the next 5 to 10 years that I want to be in, based just on those trends alone. This is going to be, like I said, a short video. I'm going to rush through some of this, so sorry. Going through the flood map, this whole area is that shaded X. We've talked about this quite a bit. I think if you want to watch the first video that I did about, we're talking about the shaded X, it's going to be, I think it's the Hugo, which is the Dallas short-term rental video. I think that's where I talked about it the most. But it really is just, it's a higher chance of flood risk than X, but it's not like an AE or one of those zones. It's something that you're going to really have to dig into and decide, is that a level of risk you're comfortable with? If you're going to invest in this whole general area, basically the whole Phoenix market. I mean, there are some parts that aren't in that, but it's most of that area. So it is something. I've always avoided flood zones when I've invested in whole properties on my own, but I have relaxed that quite a bit when I've been doing fractional investing. The main reason being that I'm not the one who's going to have to deal with the flood insurance if there is a flood, and that's I've had to make claims before, and I hate dealing with insurance companies for water damage and all that stuff. But if I'm not the one doing it, and Mogul seems to, that dealing with that kind of stuff seems to be something that they're going to be good at. At least that's how they strike me so far. Obviously, you want to decide on your own, like, do you trust these guys? Do you think that they're capable of handling this stuff? Before I forget, please like and subscribe. In the description of this video, I have links to all the places where I'm currently investing in fractional real estate online, Mogul being one of them. Some of those links will give you free money or bonuses if you're a new investor on those platforms. Some of them will say they will, and they don't really. You want to do your own due diligence on all the platforms and any of the properties on your own, right? Don't just invest in it because I am, because some of these are very high risk. Some of these it's borderline gambling. I very much believe in Mogul as a platform. I think that they're doing a lot of the right things, but of late the performance of some of my properties on there has slipped, and I could just be completely wrong, right? I mean, that's why I'm trying to share the way I'm looking at risk and I'm looking at these deals. But you want to look at, you want to do your own due diligence as well. In addition to that, in the description to this video, I have a link set up to a Discord channel where a whole bunch of us get together, share info, ask questions, talk about fractional real estate investing in general across a number of different platforms. So if you're investing on Mogul, Lofty, Ground Floor, Collab, RealBricks, any of those or more, feel free to jump in there and talk to us. Okay, back to this though. Yeah, just really do your own due diligence, especially, just because I like some of these. It's certainly, I've lost money on deals. I'm doing pretty well overall on fractional real estate, but it's possible that I'll lose all of it, right? And so that's why you want to be careful. You want to take a pace where you're not investing more than you're comfortable with at any given time and whatnot. All right, sorry. I knew this would get a little rambly. Let's start closing some of this. One of the things that concerned me a lot is when I first opened up the spot crime app, you see all these gunshots. I clicked on each of them, and none of them actually were somebody was shot. They were all like, okay, shots fired. You click into them, and I couldn't get a lot of detail. So it is, I guess, somebody reporting hearing shots fired, or maybe that there were actual shots fired, but not a person being shot. But the other thing I realized too, excuse me, is the spot crime had to zoom out a whole bunch to fill the whole map with crime, right? So a lot of these were not terribly close. This one was. But again, this was another one that was shots fired, just position, no action required. Like, I don't know what that means, but it definitely, I don't know. It still obviously could worry you a little bit. It made me feel a lot better once I realized that, and once I realized, we're going back like a full month to get this many crimes, and it had zoomed us way out to fill a whole map, right? So if we actually zoom into our neighborhood in the last month, okay, there was a theft over here, and I think up here is actually where that university is, so okay, there was an assault here, and I think that this one was actually domestic violence, and so that can happen anywhere, right? Like, this wasn't like somebody walking in the street getting attacked. So this made me feel a little bit better once I started zooming in and digging into this a little bit, and then I looked at the neighborhood scout, and we're in this section here. And this even lighter section is where that, the Grand Canyon University is. And so this is actually when you look at the shading, it's probably like this. One of these two, right, is right here. So I would say it's probably like one of the safest areas just based on the shading and where it is in Phoenix. And so what's strange is like, okay, and when you look at this spot crime map and you zoom out again, it's one of the safest areas, but on each side of it, there's these, it's these darker, shaded, more dangerous areas. And so if you actually look at where most of those crimes are, it's outside of this particular neighborhood. Why that's happening, why we have this one little section that's really not bad, and then you go over here and it is, and you go over here and it is. I don't know. But I think, in general, I've been more comfortable with a slightly scarier crime map for the for pad splits in general. And so I don't know, I was pretty happy with it once I really dug into it. Looking, this is a property here. You can see, okay, we've got bus stops close here and here. This is that Grand Canyon University right over here. I don't really know much about it. If you wanted to dig into it and see, is it really, do we think that we're going to have stays related to that? I don't ever know. It's always tough, but there is a whole bunch of, a whole bunch of stuff that you can walk to as far as like, you've got a little market, you've got a number of restaurants. And because that's one of the things I'm always concerned with is, okay, can we live here with, we have 9 rooms we're renting. There's not 9 parking spots, right? It does look like maybe you could use some additional street parking, right? Like, especially parking like on the street in front of this neighbor's house, because we're on this side here. But, we've got one, maybe we fit 4 cars here. Maybe they do something, I don't know, this one, obviously you can't park there if somebody's parked here to get out, but maybe they do something here and actually get to where you get a 5th or something. But you're definitely not putting 9 cars in that parking lot. But yeah, it looks like you can park on the street along this side, and that, the thing is, you really don't want to aggravate your neighbors in these scenarios, but it seems like this is probably not going to be a big deal to be parked. Well, okay, well, is that their gate? No, there's not a gate there. So it seems like parking over here, maybe not going to be a huge deal, but in general, really relying on people that are staying here that are going to be using the bus, that are not going to be parking a car there, is probably ideal. And so I think, having one so close, that's pretty useful. I did also want to zoom in and show you, like, I think that this is good. It does look like that the Maricopa County website is accurate as far as like this, the ADU or the casita is oddly shaped, right? You've got that really strange shape to it. I also don't understand what's going on here, if this is like a tarp on the roof because there's a problem, or if this was, I'm not really sure what's happening here with the discoloration. At first I thought it might be solar panels, but I don't think that it is. So I'm not really sure what's happening there, if that's some roof problems or whatnot. So, all right, let's see. Oh, the only other thing I wanted to talk about real quick is there were people talking quite a bit about, does the revenue side make sense, right? $62,400 in rental income. I use just Padsplit's little tool. I assume that 2 of the rooms were going to have en suites and 2 don't, and maybe that was not accurate, right? We've got 1 bedroom with an ensuite. Oh, maybe I screwed it up. Maybe we don't actually have. Anyway, that's how I did it. Maybe I'd have to change that. It would change it a little bit, but not so much. That got me $89,000 in gross. Whenever you do this, you want to go and then back out their platform fees, another $11,000, and so then that gets us to what? Or $89,000 in gross, subtracting their vacancy, concessions, move-ins, $76,000, and then you want to back out their total platform fees, and so that gets us to like $65,000 in top line revenue, the way that Mogul looks at their top line revenue, and they've got 62. Okay, so That seems like they're, pretty close. Maybe though, let me change this to 8 and 1 and then calculate earnings and then click on this view breakdown. 86, so 73 and then minus the 10. Okay, maybe that actually gets us to almost exactly their number. So I think that that's basically what they're doing. This is Padsplit's own tool. I think that they're in the business of trying to predict this accurately, right? Because they don't want you to, they're not trying to overpromise, because then they kind of get stuck with an unhappy client. So I think that seems to be in line with what we're expecting. And now, they're operating a whole bunch of these. Mogul is. So I think that the rest of their costs, I haven't really been digging into these a whole bunch, because I just, so far they haven't given me a reason to question them. They have been increasing their miscellaneous cost items over time on their pad splits, and I think that they've just come to realize that they have more of those than they expected initially. But yeah, so let's see. Is there anything else I want to talk about this? Okay, Phoenix market like that. Already looked at the map. Looked at all the valuations. I did the crime stuff and the pad split stuff. So overall, why do I like this one so much more? Really, it's just a matter of basis, right? I think we're getting into it at a good deal. Like, if you even look at, like, okay, other 9-bedroom pad splits that we're getting in this market, we're paying, maybe not in this exact area, but in this market in general, we're paying a lot more for 9 bedrooms. We obviously are taking a lot more risk on it, though. Because we have the execution risk of getting the rehab done and getting it done within that budget, right? And it looks like we have a little room. Okay, maybe we could mess up, spend an extra $20,000, which is almost a third over budget, and still be good. It'll be interesting to see how it goes. I think I'm probably going to buy a piece of this one, but because it has been selling kind of slowly, and because the expected, the first dividend isn't for basically 3 months, I might just try to wait and grab a little bit at the very end. That's been a little bit of a risky strategy on these deals, because they have, some of them have sold out very quickly. Although if you look at these last few, yeah, there's just a very little bit remaining on those. Yes, these were kind of bigger raises in their short-term rentals. They seem to not sell out as quickly. But yeah, I think I'm going to pick up. Oh, wow. Okay. So maybe this is moving faster than I thought, because this is basically after a refresh. Now it's 97,000. I had that other window open all day. I actually looked at this last night, but then just couldn't bring myself to do a video. Anyway, that is everything I wanted to talk about it. It is my favorite one that they've brought to the market so far, or in a while, not so far. There's definitely been other ones I like better, but it is just a lot of unknowns, right? We just don't know how well Mogul themselves are going to handle this type of project. I like it, though. I like what they're doing. I like this direction. I think that as a fractional real estate investor, I want to benefit from a professional team going out, finding these deals, getting a below market deal, and they be the one, putting in the work. We're profiting, we're getting to jump in at that basis, versus us buying these like turnkey properties that some other entrepreneur already made the money on, right? So I'd like to see this strategy work well. Obviously it'll be a little while. They'll have to do several of them before we figure out if they're good at it or not. But hopefully they are. Let me know if you're going to buy into this one. If not, why not? And if so, what do you like about it? Like that. One of the things is, okay, is taking that additional risk worth another, we're really only, our IRR is only like 1% or 1.5%. Well, what's the Rudolph, right? Because the Rudolph is one where, okay, this is the deal where we have the seller doing that work and taking the risk for us. And okay, we 12.3% IRR. And so then on the Blitzen, we're taking that risk 13% IRR. So for that 0.7%, is it worth it for us to take that risk? That's an interesting question, right? But then also too, is it really accurate, or is it, are we downplaying a little bit that chunk of equity that we're getting up front? Is that really helping us more than what's being baked into the numbers? And that's what I kind of think is the case. I just haven't had the energy to really dig into the numbers deep enough to know, but I think that because they're always just growing, they're always just appreciating from I think the purchase price, which, or maybe the basis on this, but which doesn't necessarily make sense if we know it's already worth more than we paid for it. Anyway, that's as much as I've got in me today. Please like and subscribe if you haven't already, and jump in the comments and let me know, is this one that you're interested in? If not, why? Because obviously my brain is not firing on all cylinders, so there's huge potential that I'm missing some stuff. So let me know. Oh, until next time, I'm going to keep making mistakes so that you don't have to.